Hello, and welcome to another update video. Today we want to cover Disney, the Disney stock. It's now coming into a price region that is interesting for a potential trend reversal. I'm actively observing this area right now. Looking at the bigger picture, Disney completed quite a significant wave 4 here in 2002. Since then, it has been in this larger degree fifth wave, which is probably not finished yet. I mean, if we break through all support levels here, I would have to assume it is already finished, but that's currently not the preferred interpretation. The preferred interpretation is that we have a 1-2-1-2 setup after those lows, and so that that first wave 2 basically occurred in 2009, and then we had one more in 2011. Since then, it has been playing out this uptrend. We had a long wave 3, basically a third wave of a third wave into the 2019 highs, an A wave down into 2020, an overshooting B wave, and we're now coming down in a C wave of this wave 4, which would ideally result in a wave 5 of 3 next, then another 4, and another 5. Could also be that we're already in this larger degree fourth wave, but that really depends now on the microstructure. We want to give it the chance to turn around in this current support area. We're going to take a look at that in a minute. So, key levels. First of all, let's start with the key levels. Yellow wave count is the primary scenario. Really, the key level for this is $65.80. I don't want a fourth wave to break below the 50% retracement level. Yeah, especially if we consider that this is an expanded flat or some kind of flat pattern that hasn't broken below the A wave low yet. That would be the expectation though. And then it would be an expanded flat pattern. Expanded flats mean we had our A wave down, an overshooting B wave. And the theoretical maximum an expanded flat should do is in this case $69.90. So we've got this yellow support area between $80.34 and $65.80. They are the Fibonacci retracements. And within this, a more specific target of $69.90. I would pay very much attention to that level. If the price breaks through all of them, then I have to assume the white wave count is playing out, which could go quite a bit lower. We would then be targeting most likely, so price around $52.60 next, maybe all the way down to $32. So the red line is really the line in the sand for me, where the overall assumption on this chart has to change. But I'm very much observing now for potential trend reversals, because out of this box, I would expect a turnaround, even if it is only within the white wave count, a wave 2 pullback. Yeah, but I have zero signs that this has happened already. No signal. Now let's go to the daily chart. If we're looking at the daily chart, in the white wave count, what it's doing here might be a leading diagonal in a wave 1. So it's moving in a descending wedge. Expectations would be typically for this to break to the upside, especially now as we are moving against support here. Now, okay, if it breaks down, that would have bearish implications, but then still we have the two levels left that I mentioned to you as support. And it could be a wave 1 as a leading diagonal of a larger C wave in the bearish wave count. But still, though, from this area, I would find it likely to get at least a bounce in the wave 2. And if that bounce is corrective, then this would also be a nice short trade setup potentially to trade the third wave down. However, if this bounce is impulsive, then we would likely be moving up in the fifth wave, which would again be a 5-wave move. So if it's a correction to the upside, poor, bad performance, then this will turn into a short trade setup from here. If we can recognize an impulse in 5 waves, 1, 2, 3, 4, 5, then the following pullback will be a higher probability setup for a long trade. Okay, so it would require quite a bit of patience. At the moment, there is quite a bit of uncertainty in the market. I mean, what you could do, you could just wait for the first small signal here of a turnaround and maybe go long, yeah, or you scale into this area. But I want to make sure that you understand that there is quite a bit of uncertainty because we're dealing with a wave 4 here. It's not exactly clear what wave degree it is. But what I can tell you is that typically these wedge patterns, they often break to the upside. So from this area, yeah, either way, currently a reaction is expected, especially as this current move down has been in place since February. And I think let's say some kind of a reaction is is due. Yeah, we also created here this bullish divergence of the March 2023 lows on the RSI. Yeah, so the price is making lower lows here, as you can see, but the RSI is actually making higher lows from this low, which was in March 23, to this low in September 23. Lower low on the price chart, higher low on the RSI. So I think some kind of a bounce is overdue, but you can see here it's embedded. The RSI is embedded in the bearish range. So it's, you know, a sustained break above 50. Yeah, not a fake out break, yeah, but a sustained break. When it starts to swing around in the above 50 range, then it might be quite a good indication that an uptrend is starting again. You know, you often see these bullish divergences in these wedge patterns. So such a bullish divergence often occurs towards the end of such a wedge pattern, of a diagonal. And again, the question is here, is it a leading diagonal in the wave 1 of C, or is it an ending diagonal in the wave 5 in yellow? So that's going to be what we now need to be watching for. But this has quite a bit of a pullback, has carried out quite a bit of a pullback. We are observing the end of a five wave cycle in the yellow wave count, okay, and therefore it is quite, yeah, I would say likely that we see some kind of a reaction. I mean, in the white wave count, another interpretation would be that this is actually, all of this is wave A, okay, but then also the B wave would get quite a bit of a reaction. So this would just be a delay of the sell-off, but would also still be a decent B wave rally, okay? So yeah, I'm very much interested here in a potential swing trade, but I haven't seen any reaction on the microstructure. Could still go a little lower. So I'll continue to focus on this one. But yeah, at the moment on the lower time frames, nothing bullish. Yes, the bullish divergence on the RSI, but I personally always need price structure to confirm. I only use the RSI as secondary evidence. It's not, yeah, it's an indicator. Yeah, it's not price, it's not a leading indicator. Only price is a leading indicator. RSI is just sort of lagging, okay? But it gives us, together with the right setup, and in my opinion, this is at least an interesting one, it gives us a hint that things might be changing. Now, again, a high probability setup will look different. A high probability setup is the following. And it takes a bit of patience for that, but you could wait for, in the yellow wave count, yeah, the first 5 waves to the upside. That's a high probability setup. That would be the wave 1 of wave 5 up there. And then the ABC pullback, to change it to yellow. And after the first 5 waves up, we can then calculate a support area, yeah, that could be scaled in here for that wave 2 pullback, the ABC pullback. And that would be a high probability setup, but it's too early for that. We can't do that yet. Very much likely that if this happens, yeah, if we drop a little lower, then we'll see 5 up, 3 down, that we come back into these price regions in this pullback. So that's for everybody who wants a little bit more, yeah, there is never certainty, but confirmation. Okay, that's my update about Disney. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.